What's up, everyone? Welcome to part 2 of building a portfolio from scratch. My name is Chris. I'm a former engineer who was able to retire at 34 thanks to my investments, and my goal with this channel is to pass on my knowledge and help you get on the path to financial freedom. In part 1, I showed you what the foundation of my portfolio would be. If you missed it, I suggest you go back and watch that video, but for now, here's a quick refresher. I like to think of my portfolio as a pyramid. The foundation of the pyramid, meaning 75% of my entire portfolio, would be made up of index funds and ETFs. I would put 30% in VOO, 20% in QQQ, 17.5% in SCHD, and 7.5% split between VNQ and VXUS. These ETFs give me a strong diversified base with a mix of growth, dividends, real estate, and even some international exposure. For the full breakdown, be sure to watch part 1. Now that we have the foundation, let's build on top of it. The second layer of my pyramid would be individual stocks. This layer would be about 20% of my portfolio, and these stocks are going to be great companies that I want to own forever. Maybe not forever, but at least for a very long time. Remember, investing is a long-term game. Some stocks I would put in my layer are Apple, Procter & Gamble, Realty Income, Target, Home Depot, Johnson & Johnson, and Alphabet, better known as Google. In fact, if you look at my current portfolio today, these are some of my top holdings. Now, these stocks should be specific to you. Just remember that they should be great companies that have been around for decades and aren't going anywhere anytime soon. A great place to start is by asking yourself what products you use every single day. For instance, what toothpaste do you use? Or what computer or phone are you watching this video on right now? Ask yourself these questions and great companies will begin to present themselves. Here's a little cheat sheet to get you started. Now that I have my individual stocks, let's move on to the top layer of my investing pyramid. I'm going to call this my speculation layer, and it's going to be about 5% of my total portfolio. This layer is where I would take some risks, especially if I was starting young, because when you're young, you can afford to take risks. So having 5% of my portfolio in high-risk, high-reward assets is definitely something I'd be willing to do. So which speculative assets am I talking about? Well, I would put about 3% into stocks that have a ton of potential, but have either yet to prove themselves or have recently ran into trouble. For instance, a lot of high-growth stocks, which were extremely overvalued last year, paid the price, with some names selling off over 70%. There could be some opportunity in this wreckage, but there could also be more garbage. This is where the risk-reward comes in. You just have to choose wisely. Some stocks I would personally buy would be Block, formerly known as Square, Shopify, Alibaba, and Meta. For me, the risk-reward on these names is worth it. My last 2% will go to Bitcoin. Notice I said Bitcoin and not crypto. Bitcoin is a risk, there's no doubt about it. But as far as other cryptocurrencies, there are way too many scams in the space right now. So I'm sticking with Bitcoin. And even if it goes to zero, it's only 2% of my portfolio. Risking 2% for huge upside is a bet I'm willing to make. Before I go, let's recap the portfolio really quick. 75% of the portfolio would be ETFs. Remember, I want a strong foundation to build on. Of the 75%, 30% would be VOO, which tracks the S&P 500. 20% would be QQQ for tech exposure. 17.5% would be SCHD for dividend exposure. And 7.5% would be VNQ for real estate, or VXUS if I wanted international exposure. Then it would be time to build. On top of the foundation, I would invest 20% in individual stocks, blue chip great companies that I want to own forever. Then I would sprinkle 3% into speculative stocks, companies that have potential but may have ran into trouble or have yet to prove themselves. And lastly, I would throw 2% into Bitcoin. There you have it. That's what I would do if I was building a portfolio from scratch today. If you like this video, be sure to hit that like button and subscribe to the channel. Let me know your thoughts in the comments and maybe what you would do differently. That's it for today. Until next time, investors.